All right. Good afternoon, everyone, and welcome to today's Fraud, Financial Reporting, and the Role of the Auditor, IRBA Indaba. It's my great pleasure to be your host for today's event. My name is Liesl Dupriya, and I'm a professional manager within the Standards Department. I see we do still have quite a few people logging on at the moment. So whilst everyone else is logging on, I think we'll take a few moments to quickly test the chat function. So for those of you who are already with us, perhaps you can let us know where you are joining us from today, whether you're from Cape Town or somewhere in the Joburg area. You're welcome to pop your suburb name in the chat to let me just get a sense of whether the chat function is working, please. Great, thank you very much, Robert. Wonderful. I see quite a few people there. Fourways, East London. That's a nice area. Rudderput, so forth. Well, welcome, everyone. Similarly, if there's anyone joining us from outside of South Africa, please also do let us know if we have any participants from Botswana or Zimbabwe, our neighboring countries. Don't see anyone from afar as yet. The fraud capital. Thank you, Arart. All right, well, welcome everyone. We're very happy to see how many of you have joined us this afternoon. Before we kick off the official program, which I'll share with you in a moment, allow me please to address a few housekeeping matters. So firstly, we are recording the event, and the recording will be made available on the IRBA website, and you will also receive a copy of it via email. This includes the slides because our presenters today will be sharing a lot of useful resources, which I'm sure you may want to refer to again later. In terms of CPD, we're not going to be providing any CPD certificates. We're not a CPD service provider. However, we can consider publishing the attendance record on the IRBA website together with the event recording if ever you require proof of attendance. In terms of mics and cameras, you'll note your mics and your cameras have been automatically muted to prevent disruption. However, we do want to encourage you, please, to participate through using the Teams reactions button. As a presenter, it's always nice to get acknowledged through a smile or a thumbs up. And then secondly, also through using the meeting chat, which we've now checked, it works well. So please do use the meeting chat. We're going to use that instead of the Q&A formal function. So what that means is, in essence, if you have any questions for our presenters, you're more than welcome to pop that into the chat. We'll either pick them up in the live discussion Q&A session. Alternatively, our presenters will be able to respond to your questions directly in the chat. Lastly, a reminder, please, that all of our guest speakers' views as well as their slides are their own, and they do not necessarily reflect the views of the IRBA. That takes care of the administrative matters. So why are we here today? Why are we having this event? Well, it's time for us to get real about fraud. And what better way to do this than to create an opportunity to have real discussions about fraud? So that's really the purpose of today. We've created this platform to engage with and learn from those with real fraud-related experience. And on that note, I'll hand over to Imran Banker, our Director Standards, for his opening remarks, please.
Thank you very much, Liesl. If you'd like to spotlight me, I don't mind. Thank you. And I'll be ready to speak. Ladies and gentlemen, good afternoon. And on behalf of the IRBA, welcome to this Fraud, Financial Reporting, and the Role of the Auditor in Indaba. We have over 500 attendees already on the webinar, joining us from every corner of our beautiful country. Thank you very much, everyone, for being here. And I've seen names pop up from across the world. It's like a little Olympic Games of fraud. People from Ireland, from Namibia, Dr. Wasonga from Kenya, and you are all most welcome. This topic of fraud is a big priority for you as auditors, but it's also a big priority for the IRBA. So as we kick off this season of webinars, we thought that we should kick it off firstly with this topic. It is frequently a topic in standard setting. It is a major discussion when it comes to ethics, but it is also a focus of IRBA's investigations and inspections regime. And if you look at complaints that we receive at the IRBA, unfortunately, fraud features fairly prominently in what we receive. That's the one hand. On the other hand, we live in a society, of course, that is fraught with fraud, whether they are simple types of frauds or more complex ones. And as you auditors and others support financial reporting, work in the system, we thought that there's a very direct impact of fraud on audit quality, and we should have a conversation about it today. Or as Liesl said, it's time to get serious about fraud. We really appreciate every one of you being here. Thank you very much for attending. Every member of this audience falls into one of four categories. There's someone here who has never experienced a fraud before in their life, and they're wondering what this is all about. And I hope today's webinar is going to provide you with some interesting content. There are also those who are sitting at today's event embarrassed, shy, concerned that somewhere in their life they missed a fraud. It was at the tip of their nose, right at the top of the file, and they missed it. And they're hoping to hone their detection skills during today's event. There is a third group, those who are sitting there with a big smile on their face today, and we're going to meet one of those real people during the webinar today who says, one day I actually detected a fraud and I reported it, and that makes me a hero. And we're going to meet one of those heroes during the session this afternoon. And then lastly, there is a small category of colleagues, professionals who are on this call, who know about the presence of a fraud, either because they're auditor or they're working in some way in governance or they're working somewhere in an organization, they're in business, and you are trying to decide what to do about it. And hopefully in today's webinar, as we listen to the experts, you're going to get the courage and the insights to deal with it, to do something about it. So whatever of these categories you fall into, this webinar is for you. We've made sure from amongst the group of speakers that we have, it's going to appeal to all of these interests. The IRBA finds itself as an important part of what we call corporate governance and financial reporting in South Africa. But we understand that the whole issue of fraud doesn't rest on the shoulders of auditors alone. And for this reason, we've been advertising this widely, and that we're so pleased to have so many colleagues join us who are from outside of the audit profession, other regulators and other industries, because I believe that together we'll be able to tackle the issues that are before us. Before I wrap up, I want to talk a little bit, because I may be the only one who speaks about this today, and this is the expectation gap regarding fraud. No conversation about fraud is complete without a discussion of the expectation gap. And the expectation gap talks to three things. The first of those is that we have a view that the standards require of auditors to do something, and the auditors may be falling short or doing less than what the standards require from them. And the literature describes that as a performance gap. And we'll talk a little bit about that gap today and what we can do to close that gap. The second gap is the gap that the public expects. The public expects auditors to do much more than that which they are actually required to do in the standards. And we describe that as the expectation gap. And today's Indaba is a very important time to get a measure of that gap, to hear what people are saying, for auditors to identify where they stand, and for those members of the public who use the audit service to recognize where the source of the expectation gap may be in relation to their own expectations. And then lastly, there is a very genuine message around the world that the audit standards at the moment demand less than what they should be doing in relation to fraud. And so there is a global project underway at the moment, which is enhancing what auditors should be doing in relation to fraud. We call it ISA 240, and we may hear some references to it this afternoon. But before I move off the screen and let Liesl hand over to our first speaker, I want to ask you to do a few things for me so we get the maximum value out of today's event. The first is, as I am approaching today, I would like to invite you to approach this with an open learning attitude. Limit the distractions. It's 2 hours. Let's try to get the most out of this time. The second thing, I hope you have, like I have, my notebook handy and a pen, and that you're taking notes. And amongst the things you should have written already was actually there are 4 groups of people attending this event. There are 3 types of gaps related to fraud. These are all useful conversation starters. When you do the third thing that I'm going to ask you to do is plan a discussion about fraud within the organization that you work. Whether it's in the context of fraud risk, your audit committee, or whether it's at the planning stage on audit engagement. Let's talk about fraud risk indicators and the audit response to that. The next thing I'm going to ask you to do is in your notes to make a note of the things that you have heard about for the first time, but that you plan to study or reread. For instance, I've mentioned ISA 240, the standard is about to be revised. That's something you want to make a note of so that you're ready, you have a deeper understanding of it. Thank you so much for being here. I think we have a really great attendance and we have a fantastic lineup. It's 1:10, and I'm going to hand the floor back to Liesl to introduce our first speaker. Thank you.
Thank you very much, Imran. Before we go to the first speaker, let's just quickly look at logistics, what the flow of the program is going to be for today. So you'll note that the program has been split into 2 sections. We're firstly going to spend the first session talking about the fraud landscape, and then secondly, about fraud in practice. This allows for a 10-minute comfort break at around 14:35, with the second half of the program then recommencing at 14:45. We'll conclude each part with a Q&A session before we would then greet that session's presenters. And then the plan is for us to conclude the entire program shortly before 4 o'clock. So you will see our program is designed to be efficient but impactful. So I really do hope that you enjoy the session and that you focus the following 3 or use the following 3 hours wisely to learn as much as you can from it. All right, so that concludes the welcome and the introductions. So we can get down to business now. Our first presenter is a wonderfully dynamic speaker by the name of Greg Tritter. Greg is a PwC partner in the Forensic Services Division. He has over 22 years of experience specializing in forensic investigations. He's served multinational corporate entities, public sector clients, as well as smaller family-run businesses. So he has a wealth of experience and quite a variety of experience that he can share with all of us. Greg, a big welcome, and over to you to kick us off, please.
Thank you, Liesl, and thank you, everybody. And yeah, everyone, welcome to the call. I just saw a little flash up on my screen, the 689 of you. So no intimidation from me, no intimidation for the rest of the speakers, but everybody welcome. Sorry, just double checking that I've got control of the slides. As soon as I do, I'll move on to my next step. Great. So I've been asked to just talk to specifically emerging fraud trends. Most of the information that I'll be presenting to you today comes from 2 sources. The first source is a global economic crime survey that's run by PwC, PricewaterhouseCoopers. It's a global survey that surveys a number of our clients and gets information from them with regards to fraud and fraud trends. The second piece of information comes from a professional body called the Association of Certified Fraud Examiners, also known as the ACFE. They do a report to the nations. This is the report to the nations 2024, and a lot of the slides will come from that source as well. I'm going to be covering a couple of things. Fraud by the numbers, not all frauds are equal, not all frauds have an equal impact, and so what do we do about it? Very much an introductory set, followed by my co-presenters who are going to go into a lot more depth in some of those areas. So let's start with by the numbers. So according to the Global Economic Crime Survey, globally, 41% of our clients and the people that participated in our survey over the last 24 months had an economic crime. Economic crime being some sort of crime that affected the business and operations of those entities and organizations. So that's 1 in 2 effectively of people have had an economic crime within their company within the last 24 months. 55% of those people reported that procurement fraud in particular was a widespread concern within their country. More on that from one of the co-presenters later. 81% believe that government efforts to enforce anti-corruption laws are becoming more robust or remaining steady. you already heard today about anti-corruption, anti-fraud programs within the audit environment and how those are going to be impacting on the way we do our audits going forward. If we talk to, where are these frauds happening? South Africans love to pretend that everything happens in the government and the public sector. Statistics tell us otherwise. Full 42% of frauds are happening within the private sector. So it's a pretty even spread between public-private sector. This is not a public sector problem. It is an industry problem. It is a greed problem. It extends across everything. If we take to the industries, no industry is exempt. It's happening in all of them. If you look at the industries from left to right there, you can see that there's a full coverage of all the industries that we operate in, all the industries we audit, all the industries we're board members on. The slide there just talks to the types of economic crime from our Global Economic Crime Survey. And you will see that a big change on this one from the last time we reported this is a significant increase in cybercrime, also leading on to one of our other presenters later today, Lucian. Not all frauds are equal. So if we take occupational fraud, so this is fraud that is perpetrated by an employee on a company, you'll see that the top three are sort of corruption, billing, and non-cash. Those are the typical frauds that we're seeing coming through. So those aren't always equal. You can't see they're an equal percentage and they're not equal value. And we'll go through that in a bit more detail. But if we talk briefly to an expectation gap, so let's talk about how economic crime is being detected within the companies and organizations that we offer. The number one thing that has been happening over the last 24 months, tip-offs. Tip-offs are the number one place that we are finding frauds being brought to the attention of management and executives to have something done about them. You'll see that only 3% are external audit for the auditors on the line. But if you move through to the right-hand side, when we query everybody on what do their anti-fraud programs look like, number one, external audits. This is the expectation gap that everyone was talking about. 90% of all people say that they use external audit as a methodology for fraud prevention within their organization. Now, fraud prevention in the organization is actually not according to the standard. So this is the expectation gap that we're talking with regards to the standard. The detection rate expected, though, of 3% versus 90% is that expectation gap that we were talking about earlier. I think that should give us some pause and just a thinking about what are our anti-fraud programs, where are they going, and what should they look like. Again, one of my fellow presenters is going to be talking to that in a little bit more detail later. If we talk to corruption, that's the other thing that should give us a little bit of pause, particularly as auditors. Corruption ends up with a various number of subsets. So we talk of conflicts of interest, we talk about bribery, we talk about gratuities or illegal gratuities, economic extortion, and a number of other aspects. Now, what also needs to be considered is not only just the impact financially on our companies, but also reputationally, regulatory. A lot of these things, a lot of these corruption indexes or corruption type frauds that are happening in the companies don't have a pure numbers, rands and cents effect, don't have a pure numbers, rands and cents effect on the financial statements we're auditing, all the numbers and rands and cents that we're looking at as a board, but they can still have significant reputational risk and they can still have a significant change in the way that we perform our audits. If we talk to a slightly broader perspective, so there's other statistics, we're talking to occupational fraud, so fraud perpetrated by an employee. If you look to a broader perspective of what frauds are happening at companies, top three, number one, cybercrime. That is a significant uptick in the last 24 months from our previous statistics and surveys. Cybercrime has been creeping up over the last number of years, but the number one reported in the last 24 months from our survey participants was cybercrime. Customer fraud, procurement fraud, and asset misappropriation are still right up there. They are still a big part of the program and a big part of the problem. Remember, I talked to 55% of companies are worried about that procurement fraud, and we'll be talking about that later from Abdullah. Again, if you take a little bit of a pause on these types of frauds and the frauds that you're seeing, some of these have a very direct impact on the numbers and the rands and the cents within your company, but some of those are also just a qualitative versus a quantitative problem that comes in your company. Also, remember that within Imran talked to ISO 240, which is obviously planning in relation to fraud on the in the entities when you're doing your audit. Remember your ISO 250 as well whenever you're talking to fraud with your direct and indirect laws and regulations that you need to be looking through to. Again, a number of these frauds being perpetrated would probably have an indirect impact, but something that you should be aware of in the companies as board members and as we go through. I think the simple answer here is that economic crime is becoming more complex than ever before. And it is becoming far more challenging to actually detect it and prevent it as we go forward. At the same time, we've already heard twice today that governments and regulators are looking more and more and more to professionals in practice, professionals in various regulated environments, and in the regulators to make a difference and actually try and put a stop to the scourge. If you look through back to the ACFE statistics, historically, we've always looked at fraud in a very linear fashion. We've looked at one type of fraud. There is a procurement fraud. But what you'll see is there's only about 10, 11% of frauds that are actually being perpetrated in such a linear fashion, according to their survey statistics. Well over 80% of frauds have a multiple faceted aspect to them. So there'll be an asset misappropriation that is covered up by financial statement fraud, or a corruption aspect that allows them to have that asset misappropriation or theft. So I think the view that we're taking and that we need to be taking again is a much more complex view, a much more holistic view to fraud within our organizations. The other problem that we're having is with an increase in cyber and cyber-related activities, the increase of things like generative AI and artificial intelligence, what we are seeing again is an uptick in the ability of fraudsters to actually perpetrate and hide those frauds. That right-hand graph shows you that only 11% of frauds and thefts that happened within the companies that were surveyed by the ACFE, only 11% didn't have document manipulation and or creation involved within the process. 41% of them had fraudulent documents, physical documents created to misrepresent that fraud. Again, that professional skepticism that we always need to be looking at when we are board members, when we are in practice, when we are accountants, when we are regulators, and when we're auditors, needs to be top of mind when we're looking at these things and going, is this document, is it supported by my understanding of the company and by my understanding of the business rationale for these transactions? Not all fraud impacts are equal. So if we look at, for instance, the top 3 frauds that were perpetrated, organizational fraud that was perpetrated as surveyed by the ACFE, we had asset misappropriation, corruption, and financial statement fraud. Only 5% of frauds were financial statement misrepresentation. But if you look at that value median, it's almost 4 times more from a value perspective than any other fraud. So once again, when we're looking at value and when we're looking at volume, we need to be making sure that we're aware of all those things. Often, when we look at fraud, we also think it's in the finance team, it's in the accounts team, it's in the team that's dealing with the cash. Maybe it's in the procurement team, but that's also not true. If you look at the numbers, we've got 12% of frauds happening in sales. We've got another 9% in customer service. We've got 9% in executive and upper management, 14% in operations. Once again, this is not a problem that's just for the accountants, it's for the business as a whole. Also seeing a significant uptick in collusion, both internal and external actors, frauds perpetrated on companies by both customers, vendors, suppliers, and hackers and external parties. When considering fraud, there are a couple of things that you can take into account. Employees are perpetrating fraud, 37%. Managers, 41%. Owners and executives, 19%. Notice the drop in volume and that increase in value again. We're sitting with executives sitting at full 3 times more than any other fraud from a medium perspective. When you're getting into those upper echelons, the people that we trust, the people that are sitting next to us and alongside us, they are the people that are perpetrating the biggest frauds at the same time. Tenure also seems to make a difference. If you've been there for less than a year, you don't know what you're doing, you haven't seen the full extent of the company, very small frauds, very small volume. But as you move to 1 to 5 years, 23 years and longer, you're going to see this increase in the value and increase in the volume of frauds being perpetrated. 46% of frauds are perpetrated on their own, according to the ACFE. That leaves 1 in every 2 frauds are perpetrated with more than one perpetrator, more than one person involved. Again, the more people involved, the higher the value of those frauds coming through. As people are more educated and they get into more responsible positions, you're also seeing that come through. University degreed individuals, 52%. I couldn't let this one slide because we are in Women's Month. 74% of frauds are perpetrated by males. That tells you one of 2 things, because all statistics are lies, is one of 2 things. Either more males are perpetrating fraud or the ladies are being caught. So for Women's Month, we'll just assume that ladies are smarter than the men, and frankly, they're just not getting caught. Age also has something to do with the prevalence, volume, and value of fraud. As people are getting older, into their 31s and 31 to 50-year-old, you have a significant increase in the value and volume of fraud being perpetrated. So we talked to tip-offs being such an important part of the process. So from a tip-off perspective, who is the people that are giving the tip-offs to the company? Employees are the number 1 people that are giving tip-offs within a company, followed by customers and anonymous individuals. Your employees are generally speaking to their direct supervisors. How's your training within your companies to pick up that information and make sure you do the right thing with it? It's not going through necessarily to a pure tip-off line, it's going through to the immediate supervisor. So one of the things to think about on that is trainings again. How are people picking that up? Once again, I think once that information has gone through to direct supervisors, executives, sometimes internal audit, scary thing is 1% through to external audit is being spoken about. Follow that on. Once it's gone to its initial source, what are they doing with that information? They are now going with that information to management in 63% of the cases. For those of you that are sitting on boards, I think you need to get a pause. Only 1 in 3 are being actually reported through to you. And for the auditors amongst us, if we're not asking the question, only 1 in 10 are being told to the auditor. So what do we do about it? As part of our excuse the text-rich slides, I'll explain that in a second. As part of our Global Economic Crime Survey in this year, what we also did is not only run the numbers, but we decided we needed to interview a number of high-level executives that were dealing with these within the companies globally. And we asked them very specific questions. What are you finding is working for you? What are you finding isn't? What are you doing differently? And how are you doing it? These responses on the next 3 slides are the answers directly from them. I left them as text-rich because I didn't want to misrepresent anybody. As Liesl said, the slides are going to go out and you can read it. But I think more importantly, I just want to highlight a couple of key aspects and give my take on their responses. 1, if a significant number of frauds are coming through your tip-offs, how are you encouraging and training people to speak up? Are you creating a culture that accepts that speak up? Because that is going to be how you're going to be picking up frauds. 2, what are your conflict of interest policies saying? When it comes to conflict of interest, some people don't always understand exactly what that conflict is. When you're thinking about conflicts, please also remember there's actual and perceived conflict, and I encourage you to write those into your policies, because a perceived conflict is just as bad as a conflict in and of itself. You've also got artificial intelligence risks. I've already mentioned this to you before. Some of the data analytics and artificial intelligence systems that we can and should be implementing to prevent and detect fraud are the exact same systems that. So it's a double-edged sword, but we need to be in the front end of technology on that. And then strengthening our defenses. And that's all the controls, all the fraud risk programs. Brush those off, test them, retest them, and re-engage on those topics. If we move to some other insights, again, I think look to social media. Sometimes there's information there. Benchmark your programs. test those programs and test them against best practice. We've already said before, regulators are at the door. Regulators are trying to push this onto management. In a South African environment, you know that there's been a recent regulatory change, for example, in the Prevention of Corrupt Activities Act, where they are starting to look to organizations and saying, you are responsible for the actions that are undertaken under your auspices as an employee of that company. What are you doing to prevent that? Where to from here? A couple of key questions to ask. There's 7 on the page. I want to mention just specifically, I want to mention 4 of those. Number 1, is your board adequately engaged on the topic of fraud, forensics, and the prevention of that within the organization? Number 3, are your assessments overdue for an assessment of their own? Look into the fact, brush them off, dust them off. Number 6, are you measuring fraud losses adequately? Not only when you have it, but run it through to its root cause, assess the root cause, and implement strengthened and enhanced controls, and keep that cycle going to keep that door closed and keep bettering the program. And I think very importantly for the auditor and for management, consider where else within the entity or the organization you are going to find those issues, or they could be within other areas of your company and organization. For now, that's all from me. I'm going to be handing back to Liesl so that she can hand you on to the next presenter. Again, thank you very much for the opportunity to talk to you. Looking forward to hearing the other presenters' views. And Liesl, over to you.
Thank you so much, Greg. I'm sure that everyone's wheels are turning now. That was certainly very interesting. So next, I have the privilege of introducing our second speaker of the day. His name is Manuel Caldera. Manuel is an associate partner in the EY Forensics and Integrity Services Division. He has more than 25 years of experience within the forensics space, having dedicated the last 12 years to forensic services and honing his expertise in financial crime and fraud risk management. You will note that in addition to being a CASA, he is also a certified fraud examiner and an anti-money laundering specialist. But I think for me, what sets Manuel apart really is his passion when he speaks about this topic of fraud risk management and tools. So Manuel, it's really great to have you. Very welcome, and over to you, please.
All right, thank you, Liesl. Just in terms of access, let's just see if I have access to the slides. While we're waiting for that, I just wanted to congratulate Greg on a fantastic presentation. I think that sets a very good base for my presentation. Let me just see if I can take control and cover the agenda. Liesl, could someone maybe just help me move to the agenda? Let's see if I have control yet. All right, so while we're waiting for the agenda, I thought I would share one of my real stories, although I do start with once upon a time. So one of the reasons why fraud risk management is important and how we're going to bridge this expectation gap that was mentioned in Greg's presentation is a practical example. There was an audit client losing millions of rands per month due to fraud-related losses. Management couldn't understand why this was happening. They had very expensive fraud tools. They had very comprehensive procedures, and they had lots of people running around trying to respond to this fraud that was detected. The auditors wanting to better understand what was going on, and obviously management's capability of preventing and detecting fraud. As part of the fraud response plan, they carried out a fraud risk management maturity assessment. Again, this was done by the forensics team led by myself. And as part of this process, and later on in the presentation, you'll see the steps that we took. We identified several fraud risk management gaps to international best practices, including the lack of regular fraud risk assessments by some of the business units where the significant fraud losses were taking place. The management obviously contested these findings. They said they had everything in place, everything was under control. But given our responsibility to report these gaps to those charged with governance, we did so. And again, it was a very tough conversation. And again, everyone questioning the findings that we had raised. At year end, because we did this at the interim phase, at year end, the fraud losses were still increasing significantly. Fortunately, by that time, the audit committee wasn't asking us, where were we? Why didn't we pick this up? Why did we not alert them that there was a problem? And instead, they focused their attention on management and ordered them to look into this and resolve this. So in terms of the happy ending to the story is we did help the client identify these gaps. The client did bridge these gaps in the following year, and the fraud losses did go down. So again, we helped the client, but also we helped the audit in helping almost bridging this gap in identifying the root cause for some of these fraud losses. The fraud risk assessment is a critical element of the COSO framework, which we will explore shortly. Just in terms of going back to the agenda, I'm a forensic investigator, and I always like to cover the investigation with three questions. Why? Why did this happen? In this instance, why is fraud risk management important? And I've already covered that in the story. What fraud guidance is available? Again, we'll recap on what fraud guidance has been made available by the IRBA, by the ACFE. There's some very good guidance out there. And then as part of that guidance, I will cover two. One is the ACFE fraud resources, which Greg has used as part of his presentation. So I'll show you where to find that if you want a more detailed look at that. But also there's also a valuable tool that looks at the fraud risk management framework. It's called the COSO Fraud Risk Management Guide. And there's also an online tool provided by the ACFE that will allow you to actually document this as part of your audit. Before we dive into the detail, again, you can never have too many stats. So I thought I would share another stat for you. And again, it's a concerning one, which was raised in our recent global integrity survey. It's entitled, "How Can Trust Survive Without Integrity?" which is an important question, especially given that one of the questions that was surveyed is the management's willingness to act without integrity. All right. So a surprising 40% of global respondents admitted that they would be prepared to behave unethically in one or more ways to improve their own career progression or remuneration, more than 1.5 times higher than the finding in our last report 2 years ago. So again, if you thought things are getting better, they're not. People are looking for ways to keep their jobs, to increase their remuneration. And again, if you're looking back to the fraud triangle, I know you've seen this 1,000 times, but if you consider that pressure is increasing, management want to increase those bonuses, those performance results. They'll always find a way to rationalize it. They'll say, I'm about to be retrenched, or I deserve this. The only way a company can actually reduce these fraud losses is if they reduce the opportunity to commit these frauds. And that's why a fraud risk management program is so critical, is to put in the controls to prevent and detect these frauds. Again, responding to these frauds, it's too late. By that time, the money is gone, the losses has taken place, and the reputation has been damaged. So let me go through. Let me just check if I can go through to the next page. We just click through. We've covered this page. Let's go one more page down. So I am sure many of you would have seen this page. It's the IRBA's guidance on fraud. There's some very good guidance contained in this. One of my favorite is obviously the IRBA Staff Audit Practice Alert, providing valuable guidance on professional skepticism and fraud risks. And I just wanted to highlight one theme that was contained in that document, in that the primary responsibility for the prevention and detection of fraud rests with those charged with governance of the entity and management. So are those charged with governance and management capable of preventing or detecting fraud? Have we considered that as part of the audit? I know we do ask them, has there been a fraud? Do you have fraud controls? But do we really consider their capability? Do we ask the right questions? I know we asked them lots of questions during the audit, but are we asking the right questions? Because I feel by asking the right questions from the right people, we may get to the right answers, which will help us bridge this gap. And again, is there an international framework that auditors can use to help them in this process? Are we alone? What happens if you don't have a forensic team to support you? So I'll answer that question. Fortunately, the answer is yes. There is guidance. You are not alone. There's a link on this page, on the IRBA page, says Association of Certified Fraud Examiners, fraud resources. And if you click through that and you go through to the following page, if you can just try and get there, let's just click again. There we go. Hopefully it doesn't change. You will have noticed that graph that Greg shared, very important statistic. On this page, you'll see the full report. It's called the Report to Nations on Occupational Fraud 2024 is available. So it's free to download. You don't have to be an ACFE member. And it's quite an interesting read. There's a lot more graphs and statistics that might give you a little bit more guidance in terms of the industry or the sector you're focused on. There's also fraud technology benchmarking report that you can have a look at. But what I would like to focus on is the stat that's at the bottom here that says more than half of occupational fraud occurs due to a lack of internal controls or an override of existing internal controls. I know we do look at management override controls as part of the audit. We spend a lot of time discussing how management could do that. But if there's no controls in the first place, there's nothing to override. So that 32% that sits there is due to lack of controls. And again, companies have lots of controls, but when you ask them, show me your fraud-related controls, there's very few that can actually extract those and show those to you. So what ACFE recommends is for the client organization to benchmark their fraud risk management program, benchmark it against the industry, the region, and the company size. By benchmarking their anti-fraud efforts against similar organizations and against the most effective methods is one of the most effective methods of reducing fraud losses. Again, the links to these are on the slides. Obviously, if you do not want to click on links, which is a good practice, you can search for these using the names available. Let me just go to the next slide. All right. So this is what I wanted to focus on. This is a very good guide. It was prepared by COSO. So if you don't know what COSO stands for, it's the Commission of Sponsoring Organizations for the Treadway Commission. Sounds very strange, but it's an organization that sets out guidance for risk management, the best practices out there. And again, the ACFE joined forces with COSO and a few other organizations to come up with this guide. There's a detailed guide that's available for $78 that you can purchase, but there's also a free guide, a free executive summary, which sets out key principles. So if you don't have the $78 to invest in this important, I would at least recommend you have a look at the executive summary, which might convince you to actually go and purchase the full document. There's 17 principles. So the 17 principles developed by COSO in 2013 don't all relate to fraud. But when you read them, they will all make sense. These are all key principles for controls that you as an auditor should be looking at in your testing of controls. But the one key principle is principle 8, which says one of the key component principles states that the organization consider the potential for fraud in assessing risks to the achievement of key objectives. So we just go to the next slide. I'll go through the details. So there's 5 pillars. So on the left-hand side, you'll see there's 5 blocks, and we'll go through the blocks in a little bit more detail. But in summary, if you want to have a discussion with your client and you want to take in 1 page to have a fruitful discussion on fraud risk management, I would take this page. And again, the questions to ask is, do they have a fraud risk management policy as part of their organizational governance? It's a very yes, no type of question. Either have it or they don't. Another key question is, do they perform a comprehensive fraud risk assessment annually? I know some companies have done this 5 years ago or every 2 years, and then they just don't update it. So when they say they do carry out a fraud risk assessment, we need to consider, what does a fraud risk assessment include? So keep this other guide, the detailed guidance on a fraud risk assessment is contained in the full guidance. So the executive summary doesn't have a lot of information, but I would split it out. So if you ever have seen a comprehensive fraud risk assessment, these are the key components. I'm not going to go through all the detail, but again, you need to have a team to do this. All right, they need to have the appropriate management level to get things done, and then obviously they need the appropriate fraud risk management experience. They need to go through and identify all fraud schemes and fraud risks, considering internal and external factors, the various types of fraud that has happened, but again, what's happening in the industry, what's happening globally, what is the impact of new technology that's now been developed. The voice recognition controls could now easily be bypassed by some of these advanced AI deepfake that can even generate video on a real-time basis. You also then, through this process, and again, this is business that needs to do this. It's not the head of compliance. It's not the head of fraud risk management. It's business that should be carrying this out because they better understand their own fraud risks. So they need to estimate the likelihood and significance of each fraud risk. Okay, obviously you want them to follow a fraud, a risk-based approach, so they can focus their limited resources on the fraud types that are most likely to occur, but also the ones that will most likely have the highest impact. So if they can focus on that area, I think they're already increasing the possibility of success significantly. And then obviously there's more detailed steps. I could speak on this for hours, but the key steps is obviously you need to identify who's going to be involved, who's going to do what, who's responsible for the control. And obviously there's no point having a control if no one is going to test it on a regular basis. So people tend to respect controls that are tested. So if employees realize that like an expense claim process doesn't get checked or gets checked every 3 years by internal audit on a random basis, the likelihood of people submitting duplicate expense claims on a regular basis is much higher than in an instance where they know monthly the expense claims are going to be checked. So again, it's all about documenting the risk assessment and then reassessing the risks on a periodic basis. So to me, this is the most critical element that can actually help bridge that gap. Understand which fraud risks are coming and put in controls to prevent it. So prevention is always better than the cure, as they say. In terms of looking at it from a high-level perspective, I'll cover the other blocks in the next page because there's a lot more detail in that. So I don't want to duplicate this. So you'll see that the first block, and again, these are the COSO 17 principles, and each of the groups have been mapped to one of the 5 fraud risk management principles that have been identified. So obviously the first one talks about having a fraud risk management program, having that fraud risk policy, having the right expectations of the board and senior management, and the commitment to high integrity and ethical values. So it's all about tone at the top. Again, protecting integrity, hence the importance of keeping this as center of your fraud risk management program. So I'll cover a few of the key points, but these are the things, the questions that you can ask your management team. Is there a demonstration of commitment to integrity and ethical values? So is the CEO's messaging that goes out all focused on meeting revenue targets? Or do they recognize whistleblowers? Do they recognize people that said no to corruption? The unfortunate thing about corruption is if you don't pay somebody, you lose the sale, and your performance is then rated as below par when your competitors may be willing to sacrifice integrity for the short-term gain of meeting sales targets. So again, management need to value and reward integrity over and above profit and earnings per share. So that you can see from the messaging that goes out, both in the CEO communications, the financial statements, the directors' reports. You'll see what the tone is. The other key thing is the board of directors need to demonstrate independence from management and exercise oversight and develop a performance of internal controls. So the board of directors really needs to look at management's performance. Are they doing their job? And if they're not, then there should be consequences to that. But obviously for the board of directors to determine if management is doing their job, there needs to be documented processes and controls to understand if those are being complied with. Again, management then establishes, with obviously the correct board oversight, the structures, the reporting lines, and appropriate responsibilities in pursuit of the objective. So again, this could be all kinds of control objectives, but again, let's put it in the context of fraud. Again, in terms of competent individuals, point 4, very important. I see many organizations that allocate fraud risk management to someone that's never done fraud risk management in their lives. They've never read fraud risk management guidance. They just happen to have some spare time, and then suddenly they become the head of fraud risk management. Again, recipe for disaster. And then again, number 5 is very important. The organization holds individuals accountable for internal control responsibilities in the pursuit of objectives. How many times do we see people getting away with overriding of basic controls? There has to be a culture of accountability and people held, even if it's the CEO. If he or she steps over the line, there should be clear accountability. In terms of the second focus areas, obviously this risk assessment, and I did cover that in a little bit of detail in my previous slide. But again, you need to be able to at least consider the potential for fraud in assessing risks. So that's objective 8. And again, this ties into all the other objectives. For example, objective 9, assessing changes that could significantly impact the system of internal control. How many times have we seen clients changing IT systems, take on balances, mysteriously changing or data being lost? Those are the perfect storms where people can utilize those small lapses in controls to really take advantage of that. So we need to identify changes and prepare for them. Make sure that those balances that get carried forward are the correct balances. But again, it's all about fraud risk assessment. What's going to happen in the following year? Let me just go to the next page. Let me try and click. There we go. Thank you. The next key area is obviously the control activities. And again, this sounds pretty obvious, but you have to develop and deploy preventative and detective fraud control activities to mitigate the risk of fraud. So once you've identified your fraud risks, you then go and design appropriate fraud controls that will then either prevent it, which is ideal. So if you don't give access to people to your system, that's a prevent control. If somehow the people get in and make changes, there should be a detect control, some form of log that will then identify the potential change. And then someone hopefully reviews the log on a monthly basis to get through these things. In terms of the other key areas, obviously communication is important, training is critical. And again, I really recommend you download this so that you have a checklist almost for yourself in formulating your preparation and your questions for your meetings with your client. And obviously the last step is there's no point in having all of this in place if you don't test these controls on a regular basis and then update it to improve. Again, it's only as good as your last fraud risk assessment. Just in terms of my next slide, I think I have one more. So this is a very nice tool. It takes all the things that I've just discussed and puts it onto an online tool that you can access. You don't have to be an ACFE member. You as a member of the public can access this tool on this link. You can search for it as well. Search for the fraud risk management scorecards. It's got the 5 principles, and under each 5 principles, you'll see a whole list of detailed questions that you can co-develop with your client. You can ask them for like what is their perceived rating? Are they red, yellow, green? So obviously it's the RAG status. And if they're saying they're green, using professional skepticism, ask for evidence. If they're saying they do have a fraud policy, obviously obtain the fraud policy. In instances where they admit that they don't have anything in place, obviously this is part of the process to identify gaps and recommend that they carry things out. So the nice thing about this tool is that once you've completed the 2 or 3 pages of questions, it takes about an hour to complete at a high level. You can download this into an Excel file, or you can download the report as a PDF. And the nice thing about it, you can obviously print screen this to put into your management recommendation letters. And if you see that the score is all red, again, this should be a red flag to the audit committee or those charged with governance that serious investment needs to be put in place to prevent and to increase the probability that you will prevent and detect frauds. I think that is my last page. Right, thank you. If you do have questions, you can raise them in the chat. I will be answering them after this presentation. But I really appreciate the attendance. I think we've got 794 on the thing, well above my expectations of the people that will attend. But thank you very much for your time.
Thank you so much, Manuel. You've really introduced us to a whole new world of insights and resources. And I think what's so nice about it is it's so practical. So I'm sure everyone is going to find something that they can use on the audits going forward. So that's absolutely great. So I have the pleasure now of introducing our third and last presenter for part 1 of the program, at least. Here to talk to us about a very exciting topic, the topic of cybersecurity and its intersection with financial statement reporting and audit. So I'm very pleased to introduce you to Lucien Pierce. Lucien is a director of PPM Attorneys. They are a boutique commercial law firm that provides legal services related to information and communication technology, amongst others. Lucian himself is very well versed in the legal aspects of information security, particularly data protection and privacy. Lucian, I look forward to being enlightened on this project. So thank you very much. Welcome, and over to you, please.
Great. Thank you, Liesl. It's such a pleasure to be here today to talk about something that I absolutely live, eat, and breathe, cybersecurity. Interestingly, I have a long association with IRBA. You just, in a good way, of course, having been associated with it for about 10 years at one point in time. So today I'm going to touch on cybersecurity and why it's critical for you as auditors to know a little more about the laws that relate to it so that you can incorporate it into your financial reporting. So I'm just going to also get my, there we go, perfect. So what's interesting is that I've been keeping an eye on the Auditor General's MFMA reports each year, the consolidated reports. And much like the graph that you see in front of you, which I'll talk about in a minute, I do this silly exercise. I call it silly. It's a typical lawyer thing. Is I do a word search each year and look for words that relate to what I do. And interestingly, for example, the 2021-2022 report mentions cyber 4 times, and it mentions technology about 7 times. Looking at the most recent report, there's an increase, and it's not huge. As far as cyber is concerned, it's mentioned 7 times, but when it comes to technology, it's mentioned about 30 times. So much like what the previous speakers, Greg and Manny, have said, cyber is becoming quite a critical element as far as risks are concerned, and of course, what you talk about in your financials. But as far as breaches and cyber risks are concerned, another report I look at every year, you can see I don't have too much time for anything else, is the cost of data breach report. It's a report that IBM and an institute called the Ponemon Institute produce every year. They've been doing it for 10, perhaps 15 years. And this year, what we see is that the cost of a data breach has increased from last year by about 4 million, so from 49 to 53. You might ask, well, if I run a business like Lucian's, which only has about 12 staff members, I certainly wouldn't be paying 49 million. But what they do is they conduct a survey with a whole lot of questions and come up with this particular answer. So for me, it's quite important, perhaps critical, to note that data breaches and cyber incidents are becoming a lot more prevalent and a lot more expensive for organizations to deal with. And I've got some fancy slides. So why should you as auditors be keeping an eye on and observing cyber risks and cyber incidents? Well, the reality, as we've seen, particularly where Greg spoke, is cyber incidents and cyber-related fraud are right there at the top of, or I suppose, attack vector, if we could call it that, or method that fraudsters are starting to use. I hope I got this the summary right, Greg, of what you spoke about earlier. But what are cyber risks, and what are the types that you're likely to encounter, or your clients are likely to encounter? Well, the most common one is a data breach, essentially one where a malefactor, a hacker, some bad guy gets into an organization and manages to exfiltrate a whole lot of personal information about data subjects. Now, you might say, oh, well, that's pretty cool because that's just personal information and it doesn't involve financial information. Well, the reason I used that term was intentional because in South Africa, uniquely, unlike other countries in the world, personal information includes the information of a legal entity. So if financial and other confidential information is going to be exfiltrated, it's going to impact on your company or your clients as well. The next one is ransomware. Ransomware is that very scary site you get on your screen one morning when you come in, and there's a message that says your information and your data has been taken, and you have to pay us half a Bitcoin, because Bitcoin's quite expensive nowadays. They're becoming generous, before you get your information back. What's also quite critical about that is that there are two types of hackers, let's use that term, two methods that they use. They're what I call the smash and grabbers, who simply come in, lock you out, and demand some money. In that instance, of course, you're lucky because they don't exfiltrate your information and put it somewhere else. The second bunch use a double extortion method, if I could call it that. They lock you out, and they also take your information and threaten to put it out there on the dark web. Of course, needless to say, if that information is out there, it can cause enormous harm to your clients. And of course, that's something you're going to have to report on as well. What is critical infrastructure? This is where hackers would typically come in and cause some damage to one or other piece of your client's critical infrastructure. We've all heard of instances where water processing plants have been infiltrated, and the infrastructure that operates the water processing plant has been affected and controlled, and the hackers have tried to cause major harm as far as water processing is concerned. It happens with electrical infrastructure, it happens with hospital infrastructure, and this is something that you would want to take note of as well as far as your clients are concerned. The next one is business email compromises. Essentially what happens here is that communications between two parties are intercepted, and the documents are then fraudulently manipulated. And typically what occurs is that banking or other financial details are changed so that the person who's effecting a payment is actually paying to the fraudster. The last one, which both Manny and Greg touched on, is the risks associated with emerging technology. What's emerging technology? Well, a typical example, the buzzword for the past 18 months is artificial intelligence. We'll talk a little more about the risks there, but these are the types of cyber risks that your clients are likely to encounter depending on the sectors that they're operating in. Great. So why is Lucien here today talking to you about cyber crime, cyber risks? Well, I've pretended to be an auditor, and I went and read one of your ISAs, if I could call it that, as simple as that. Consideration of laws and regulations in an audit of financial statements. It's the only one I've read, actually, to be honest. So what does it say? It says, other laws and regulations that do not have a direct effect on the determination of the amounts and disclosures in the financial statements, but compliance with which may be fundamental to the operating aspects of the business. I'm sure you all know it off by heart. I see the smiley faces. I don't. And then it continues, to an entity's ability to continue its business or to avoid material penalties. Non-compliance with such laws and regulations may have material effects on the financial statements. So that's the extent of my knowledge of your ISAs. But what you can see there is that you need to have a good knowledge of laws that relate to your clients' businesses and the impact that those laws could have on your clients' businesses. So I'm here to give you an idea of some laws that you might not have heard of, some very recent developments, depending on what sector you're advising in or you're auditing in. So as far as ISA 250 revised, I was told I'd better say revised or else I'd be in trouble. That is what I'm going to be touching on, and why you need to know a little about what other laws are out there as far as cyber is concerned. So here is a long list, and I'm certain that you've probably heard of half of these, but I thought I would focus mostly on those in the financial services sector, the tech sector, which is where I predominantly operate. And I thought I'd throw some ideas out there so that at least when you're auditing your clients, you can perhaps think, oh, perhaps Lucien mentioned this, perhaps I should look at this, or perhaps I should look at that. So some of you might have heard of the Prudential Authorities Directive. Okay, I'll come to your question afterwards, Madeline. Thank you. I'm not good at multitasking, but please keep the questions coming. So the directive on cloud computing and offshoring of data, that is critical and relates to financial services operations. And essentially what that says is that as far as cloud computing is concerned, you need to take certain steps to ensure that security levels are sufficient, that where the data is held, that sufficient laws are in place to ensure that that information that you are putting into the cloud is in fact secure. Of course, needless to say, if you get that wrong, you're certainly going to be mentioning that on your financial statements. The next one is something which is fairly recent. It was in the process of being drafted for some time, but it effectively became a standard promulgated, published earlier this year, and it looks at cybersecurity and cyber resilience. And this is something I actually wrote about perhaps 10 or 15 years ago, and the lack of reporting on cybersecurity, cyber resilience, and the risks in financial statements. So I'm glad to see that there is a move in that direction. So basically what this standard talks about, again, goes into a lot more detail than the cloud computing and offshoring directive. It talks specifically to steps, standards, processes, procedures that you need to have in place as far as cybersecurity is concerned, and on the other hand, cyber resilience. In other words, the ability to either rebuff some sort of attack or recover from that attack. I mentioned the Banks Act and the Financial Sector Regulation Act because both the standards and the directive that I've just mentioned come from one or the other of those acts. So it's quite important to keep an eye on developments in those pieces of legislation, because directives and standards and guidelines are published often by those entities. The next one, of course, is something that you've probably had overload of in the last 2 years or 3 years. That's the Protection of Personal Information Act, POPIA. And we've seen a lot of publicity around this. We've also seen a lot of breaches, if I could call it that. We've seen what happened to the Department of Justice, and this is quite a quirky, strange, I wouldn't call it strange, but actually very weird story. So the Department of Justice is the department under which the information regulator, which regulates oversees POPIA. So you have the Department of Justice, and under it you have the information regulator. So of course the Department of Justice had a major breach, which of course affected the information regulator as well. So we were all chuckling as privacy and cybersecurity lawyers, because there is an obligation when you have a breach to report the breach to the information regulator. So we were wondering whether the information regulator reported itself to itself. Anyway, back to the point there. In this instance, it seems the Department of Justice didn't take advice that it should have taken, and ignored the information regulator's investigation into the cyber incident that happened. It was a very serious incident because what happened was that it affected records in the master's office. Estates could not be progressed and wound up. Maintenance could not be paid. So it really had an impact on people's lives. What the information regulator then insisted was they conducted an assessment, and they notified the Department of Justice of what steps it must take to remedy this. Of course, the Department of Justice simply ignored this, with the result that the information regulator issued a fine of 5 million rand against it. Now, the issue here was that as much as the findings were made, recommendations were made how to remedy the situation, and the information regulator was very specific because certain licenses weren't renewed and certain staff didn't implement updates, etc. And the Department of Justice just didn't carry that out. So because of that gross negligence, if I could call it that, in ignoring the information regulator's demand, that fine was issued. So POPIA, keep an eye on that, and I'm glad to see that in some financial statements recently, there is more and more reporting on POPIA compliance and certain impacts that it's having. The next one to keep an eye on is the Critical Infrastructure Protection Act. And this is an act, if any of you are knowledgeable on the law or older laws, it's the replacement for what is called the National Key Points Act, which essentially provided protection against spying and espionage on these critical infrastructures like the nuclear plant. I've just gone blank, Kuberg, I think it's called, and infrastructures like that. The point here is that the Critical Infrastructure Protection Act has placed certain obligations on entities that have been classified as critical infrastructure to comply with certain cybersecurity and other related requirements. Now, if you're auditing your client and you see that it hasn't complied, that in my mind is going to be a major risk that you're going to probably want to raise one way or another in your reporting. The next one is the Cybercrimes Act. Great piece of legislation. It's come in to replace and plug many gaps that existed as far as cybercrime was concerned. In fact, an interesting one that I encountered a while back, I don't know if it's an urban myth or if it is in fact true, but as lawyers, when you charge someone with theft, it is the elements of it are the unlawful taking of the property of another. But of course, some of you who are my age would have heard of Pirate Bay and all those other sites where you could get free downloads of Friends or whatever your favorite program was. I didn't do it, I promise. And of course, there was one very clever lawyer who one day, when his client was charged with piracy, said, what are the elements of theft? The unlawful taking of the property of another. And he questioned the witness, and he said, well, my client went into Pirate Bay and he found a copy of Friends there. And when he left, was the copy of Friends still there? So the person said, yes, a copy was still there. And he said, so did it move? No, it didn't move. He might have made a copy. And of course, that was the defense, that there wasn't a taking. But the Cybercrimes Act, back to reality, is that it's there to plug those sorts of gaps that very clever lawyers used in the past. But why I raise it is that there are two very specific requirements, or a specific requirement as far as financial services providers are concerned, and as far as telecommunications companies are concerned. And if you're servicing clients in that sector, what's important to know is that if there has been some sort of breach of that client of yours, telecommunications or financial services, there's a strict obligation to report that within 72 hours. I raise it because if your client doesn't, there are likely to be severe penalties and other consequences. So again, something that you must take into account if you are auditing those sorts of clients. The next two are more policies than laws, and there's a difference between a policy and a law. Excuse me. So this one is quite clever. And again, the intention here is to get you to think out of the box when you're looking at your clients and producing financial statements and commenting on them, etc. So in this instance, there's a new policy that was published earlier this year called the National Cloud and Data Policy. And, it's a great policy. It looks at how we can keep data in the country, how we can monetize it as a country, exploit it. And I use the word exploit in the positive sense, as in you would exploit copyright. And why I raise it is because it is going to impact in one way or another on data centers. So if any of you are doing work for a Liquid or a Huawei or a Microsoft or a Google who have data centers in the country, or Amazon, I should say, consider a law like this, get to know it, keep an eye on it. Like ISO 250 revised says, you need to know what's happening with your clients. And if I had to look at this and I would think, what impact is this going to have on my client if it is more restricted in what it can do with the data that is in its data centers? And just another example of how a law that you might gloss over could have an impact on your client. And it could be In any environment, a regulatory environment where there are licenses involved, it could be mining. In this instance, it just happens to be telecommunications. What this policy says, this next generation radio frequency spectrum policy talks about is it comes up with a whole lot of new provisions or plans. So a policy is a plan which is then implemented by a law. But this policy talks about something that really wasn't in place and is worrying for some telecommunications entities in the sector, is it talks about how there's no longer a guaranteed renewal of a license. So licenses are pretty expensive for spectrum, the types of licenses that MTN or Cell C or Vodacom have, and they would have paid many millions for those licenses. Now, immediately for me, when I see a policy coming out saying the renewal of your license is no longer guaranteed, the question I ask is, well, if I'm investing millions and millions in infrastructure in this sector and there's no guarantee for me to get further returns out of my investment, should I not be raising this as a potential risk? So those are examples of laws that have come out recently that are in the cyber sector, excuse me, and which you should be keeping an eye on. So a lot of them, in fact, for lawyers as well, simply slip under the radar, and you might not be up to date, but keep an eye out because there will be some surprises out there, and you don't want to be the one who misses it and doesn't raise it as a potential risk for your client. Great, thank you for the heart. So I thought I would give you, how much time do I have left? Lost track. Okay, 5 minutes. Great, thank you. As far as ENS and PSG are concerned, ENS is a very good law firm, rivals, friends of mine, and they had an unfortunate incident where a fraud occurred. And in this instance, it was what we call a business email compromise. And the short version is a client of theirs who was purchasing a property was emailed certain documents. Those documents were intercepted at some point, details changed, and the 5 million rand eventually, a portion of it, a huge portion of it, ended up with the fraudsters, and the client sued ENS. Initially, what the court said was that ENS should have spent a little more, and in fact, the court said had they spent about 1,500 rand more on a particular piece of software, they would have been protected, and they ruled against ENS. But it went on appeal, and the appeal court said, no, this is not fair. ENS shouldn't have been expected to go that far. But the point here is ask your clients, if there are potentially at risk as far as business email compromise is concerned. And a similar situation happened with PSG, where 800,000 rand went astray in a similar way. The SA Post Office, year after year, experienced major cybercrime as a result of employees. You have to ask yourself, if you're the auditor, why was this happening year after year, and why wasn't it being remedied? You might have seen in the press recently very similar circumstances that the Department of Public Works over the past 10 years has lost 300 million rand, again, through cybercrime. And in this instance, it's almost proved that it was an inside job and employees were involved in this. The SolarWinds one is quite interesting, and I think an important one. What happened in this instance was that the CEO, essentially what happened was SolarWinds produces a piece of software that sits on many companies' computer systems. Some hackers managed to get into SolarWinds' software, and through that they got into American government and many commercial entities. But the point here is that the CEO and the chief technology officer were charged with fraud and are currently undergoing a trial because they didn't disclose sufficiently that there were indeed weaknesses in their processes. In fact, the Americans have got a certain reporting system to their regulators, and this wasn't disclosed. So consider your clients hiding certain information and the consequences of that. The next one is CrowdStrike. which recently, if any of you use Microsoft and you have CrowdStrike as a piece of security software, you would have had a blue screen 2 or 3 Fridays ago, and 8.5 million computers across the world were affected. The point here is that, again, CrowdStrike's own shareholders are suing CrowdStrike itself simply because they said insufficient disclosure was made. The last point I'm going to make, and I probably have about 20 seconds, is on artificial intelligence, emerging technologies. If your client is making major investments in certain types of software, systems, computers, AI, you need to ask yourself, are there any risks in this? As far as AI is concerned, if you just Google, you'll see that there are a multitude of lawsuits taking place at the moment because of accusations of copyright infringement and other risks that are involved. So if you see a client saying, hey, we're acquiring a new AI system, ask questions around that as well. So those are my examples. I hope I've given you a little more information and food for thought this afternoon. And that's the end of my presentation.
Fantastic, Lucian. Thank you so much. That was really insightful. I think whilst I invite Greg and Manuel back to join us for the Q&A session, I wondered whether you had any response perhaps to the comment that Madeleine made. She said it was something specific that you said, and she said, I think going concern might also be impacted. Some of those ransomware or fines for breaches can be detrimental for a company. So any thoughts on that statement by Madeleine?
I think Madeleine is absolutely right. Imagine the circumstance where you haven't backed up and all your data, you're dependent completely on the data that you don't have access to. That's likely to be the end of your organization if you're never able to get it back. And I've seen instances where organizations have really struggled to get their data back, and really that could be the end of it.
Yes, yes. No, certainly. It seems the consequences at least can be very serious. I think if I don't see any other questions in the chat at the moment, Greg, so if I might perhaps ask you a question. When you presented, you highlighted prevalent stats related to customer fraud and asset misappropriation, 2 of the examples that we're not covering in the session today. So I was wondering whether you could provide us with any real or common examples of either customer fraud or asset misappropriation, just to give us a better sense of, what this presents like in practice.
Yeah, thanks, Liesl. I think maybe asset misappropriation is the easy one. It's the one we think about probably most readily when we talk to fraud in a company, and it's very much theft. So asset misappropriation is taking an asset or taking cash, and it's pretty much that simple. So I'm going to go with a customer fraud example for you because it just seems a little bit more complex and something that we need to be thinking about differently. Customer fraud is a fraud perpetrated on your company by your customer. Very often, again, that takes a little bit of collusion because it needs an internal and external actor. Sometimes there's that corruption aspect, and just again a reminder about complexity of these things. The case that we investigated was a case where a product was ordered by a customer, actually had a cyber element as well. That request was intercepted from a cyber perspective, and the request actually went through to change the delivery address to site rather than the normal warehousing. As a result, what ended up happening was the product ended up going through to a third-party site and disappearing, and the customer themselves, in this case, didn't actually even place the product order in the first instance. So these things get incredibly complicated. And I think the highlight here is think about what can go wrong, have a response plan to that from Manuel's perspective, consider how these intercepts happen from a Lucian perspective, but fraudsters are wide awake all day, and as good as you are at technical accounting or reading the ISO 250, Lucian, they are as good as that at working out a way to get through your perimeter and make sure that they can take something that doesn't belong to them.
Yes, certainly. I think from the way that you've explained it, it seems like they almost know the system better than the people who work at the organization, which is tricky when you're coming in as the auditor, and especially when you're new, the new auditor on the engagement. But thank you. I think that certainly makes it real. Manuel, in your presentation, you shared some very useful resources related to fraud risk governance. And one of the things that I thought about was, how would you engage your client on these fraud risk management frameworks or guides? And I think especially clients who perhaps don't have sophisticated frameworks in place as yet. And I think almost like a part B that goes along with that is, how scalable are these frameworks?
Thank you for the question. I think maybe I'll start with the second part of the question in terms of scalability. So we've used this framework from very small clients, not listed, to some of the largest banks in Africa. So again, the questions don't change, just the time it takes to find the answer. It just obviously takes you considerably a lot more time to go through all the business units. And the way we normally approach it, again, we're not there to prove that management is not doing their job. We're there to look at the fraud risk management framework as part of our audit. And if we're able to provide valuable guidance and input and recommendations, I think that if the client sees it in the right spirit, you're likely to get a lot more cooperation than them thinking that you're out there to prove that they can't do their job. So you do get both types of reactions where the client doesn't want to cooperate and they say this is not required as part of your audit. And eventually we need to convince them that it is part of our audit. We can ask them any questions that we need to reach the conclusions we need to reach. But normally the cooperative approach, showing them this will add value to your fraud risk management controls, and this will give you an opportunity to reduce fraud losses. So that's what's worked for me, Lisa. Thank you.
Thanks very much, Manuel. I think that's very true. I suppose it's balancing that side of how helping the client is also, in essence, indirectly helping the auditor, because you're at the same time managing your audit risk, correct? All right. I think I saw one more question actually for Lucian. And it's not the question that I thought about asking, but it's something that I'm picking up in the chat. And I think some of the attendees have indicated that, there's a lot of laws and regulations in terms of what you've highlighted. I suppose we as auditors are not experts on all of these laws and regulations. So where do you start in terms of educating yourself and digesting, what is most relevant for you to consider and get familiar with for the purposes of your audit risk assessment?
Yeah, it really is difficult to keep track of all the laws that might apply to a particular sector. But I would encourage whoever is tasked with this to start at some point. Don't just put it off. How do you eat an elephant? One bite at a time. So I would say look at what is most pertinent to your sector, create that regulatory universe, the list of laws that you apply, and from there, just add to it as you come across or encounter laws as you go up about doing your business in that particular sector. It is a tedious exercise, but it really is worth the effort because it's going to reduce your regulatory risk.
Yes, the consequences are too significant to measure against, I suppose, the cost of investing in getting familiar with these frameworks. Then the last one, Lucian. As I said, I'm still learning a lot about cybersecurity, and perhaps many of the other people on the call are. But I suppose, when does a cyber event or attack become fraudulent? So, what are the kind of legal and practical considerations that those of us involved in the financial reporting ecosystem would need to consider?
So I think the simple question is, as soon as there is some sort of loss that has occurred as a result of deception. We mentioned the business email compromise type of situation where documents are manipulated and one or other party suffers some sort of loss. So that is the most simple answer, I think, as far as when does a cybersecurity incident become a fraud, when there is some sort of loss.
All right, thank you very much. One last question before we say goodbye to you for today. I saw there's a question and it says, to all presenters, how would you go about training auditors to be more aware of fraud risks and to ask the right questions to clients. And maybe I'll open that up to Manuel and Greg to give Lucian a bit of a break.
I think maybe just briefly, I think there's a lot of information out there. Reach out to resources at the ACFE, as we mentioned. Again, training everybody, again, this is not something they covered at university at great depth, but again, maybe it's something that they can look at for the future accountants. But again, it's our responsibility to keep ourselves up to date, and fraud is so topical, and it's something that should be easy to find relevant material to keep yourselves up to date. That's just my recommendation. Thank you.
Thanks, Manuel. I think my recommendation is exactly the same, but if you're doing something, do it with that professional skepticism. I think if you can just keep your eyes open, I know when we're on an audit, we are under pressure. We've got everything that we need to do. There's a long list of regulations. ISO 240 is still one standard. There are lots of standards, and I know we're ticking all those boxes and we're getting through our audit and we're getting things done. But while you're doing it, keep your eyes open. Professional skepticism, question what you're seeing, is the number one defense for an auditor in my mind. So that would be my viewpoint.
Wonderful. Thank you so much. Thank you for taking time to share your wealth of experience and expertise with us. It's been great to be your host for this first session. I'll let you get back to your real lives now while we give our attendees a bit of a comfort break. And of course, if you want to stay on for the rest of the session or for part 2, you're also most welcome. So to our attendees, a reminder that our second half of the program will tackle practical fraud scenarios with a deeper dive into employee fraud and some lessons learned from discussions with a whistleblower. So we will recommence at 14:45. We'll see you just now. All right, it is 14:45 as per my watch. I know that was a very quick break, so I hope that you have managed to at least make a cup of coffee. At this point, I'll say welcome to the second half of the fraud financial reporting and the role of the auditor IRBA Indaba. For those of you who are just joining us, we spent the first half of the session exploring the fraud landscape. All right, and now we're commencing with our second part, which means we're moving to our fraud in practice session, kicking off specifically with the topic of employee fraud. So for this purpose, I'd like to introduce Abdullah Sidat. So Abdullah, you will see he is the head of Kanyisa Forensic Audit. He has a 26-year track record as a forensic auditor, specializing in procurement fraud and investigating corruption. Abdullah's experience is actually so vast that it was hard to give him only one topic to speak to. But Abdullah, we can't wait to hear more from you about this very disconcerting topic of employee fraud. A very warm welcome, and over to you, please.
Thank you so much, Liesl. How are you keeping?
Good,
Good
afternoon
to all the attendees. I must tell you before I begin, Liesl does exaggerate from time to time. We'll talk about that at another time. Am I audible, Liesl?
You are perfect.
Yeah. All right. So thank you to the previous presenters, Greg, Manuel, and Lucian, for that fantastic and insightful presentation. 764, 750 now attendees. So that's intimidating, eh? Anyway, my name is Abdullah Sidat, and I'm honored to be sharing your valuable time. I know I have your refreshed attention after your break. My presentation today largely focuses on walking you through the mindset of a fraudster and countering fraud with the mindset of your own, right? Now, the first slide, that title, The Enemy from Within, Employee Fraud, is so apt. Employee fraud, also called internal fraud and often referred to as occupational fraud, is basically fraud that is committed internally by an organization's own employees. The previous presenters elaborated on that so beautifully. Let's accept from the beginning that we will always be part of a world where people and work form an integral part of survival. And that's fine. But where there is man, there is an inherent, incessant, and relentless fervor to want more. When this fervor to want more transcends the red line and transforms to greed, is when the real decay starts, right? So generally, employee fraud is categorized into a trio of misappropriation, corruption, and financial statement fraud. And Greg chatted about that quite a bit. So I'm going to take you to the next slide. The relentless fight that may never go away. So let us unpack the factors that contribute to employee fraud in the public sector as well as the private sector. People, let us understand that employee fraud doesn't just happen. Certain conditions, or as I call them, or I like calling them climatic conditions, present the perfect setting for a storm to erupt. A recent study presented the most startling stats on employee fraud in the public sector. 23% of the budget allocated for administrative purposes was tainted with maladministration. 50% of the budget allocated for procurement was tarnished with serious allegations of procurement fraud, and 20% of other budgets were corroded by employment irregularities. These are worrying numbers, people. And these numbers, if these numbers don't jolt your conscience, believe you me, nothing will. Let's see what led to this. So in the public sector, currently amongst many other contributing factors, there is a widely prevalent atmosphere of disloyalty. And this disloyalty originates from the following deteriorating mindsets and behavioral traits that I'd like you to keep in mind. Employees in the public sector often share the feeling that they're merely using the government sector as a springboard for a better future, and therefore don't have to show loyalty to what is considered as a temporary journey. Employees also witness other employees get away very easily with fraud and often get tempted to do the same. Far worse than that is watching senior office bearers get away with fraud far too easily. And worse than that, senior office bearers sometimes even getting amnesty. And worse than both of these is watching a judiciary justice system that is not independent and one that favors the perpetrator, which often happens. These factors basically largely contribute to disloyalty in the public sector, and that disloyalty often gives birth and manifests itself as employee fraud. Let's take a quick look at the private sector, though. There are similar behavioral patterns that contribute to a culture of fraud, and some of the more common ones are misplaced trust, showing preferential trust, or trusting someone you don't know well enough, and usually that results in paying a very high price. Poor hiring strategies, resultant of a lack of sufficient due diligence, inefficient background checks, and hiring strategies that are tainted with nepotism, ineffective supervision, one that prompts employees to divert from their core responsibilities to opportunities that enrich or that could enrich themselves unlawfully, inadequate policies and procedures that are fragmented with fragmented internal controls, lack of fraud risk management strategies, and a poor appetite to take remedial action against perpetrators. And Greg and Manuel elaborated so beautifully on this aspect. All of these factors in the public and the private sector contribute largely to employee fraud. In summary, to mitigate the occurrence of this fraud, it is imperative to have the proper mindset and a plan of action. I want to unpack these two components further. A plan of action will include a strong, determined culture of zero tolerance, which we have to advocate in every sector of society. And that is accompanied with a robust reactionary protocol, and all of this embodied by a thorough fraud risk management strategy. If this plan of action is employed, believe you me, you're on the right track to counter employee fraud. What about the proper mindset? Establishing a culture that is based on a fine-tuned balance between creating an energized environment that fosters growth, profitability, market penetration, and with an accepted culture that fraud mitigating mechanisms are in place, and that these will not only detect and mitigate fraud, but that these fraud reaction mechanisms will counter the aftermath of fraud, and that they are severe and decisive. If the above are well placed, you have a bulletproof vest to withstand the impact of fraud. Slide 3, please, Liesl. I want to walk you through the impact of fraud and the evolving fraud triangle. Now, most of us have heard about the fraud triangle so many times before. And what started as a fraud triangle comprising 3 components of pressure, opportunity, and rationalization quickly transformed and evolved. And from the triangle, it became a diamond comprising opportunity, capability, rationalization, and motivation. And yes, you may choose to structure and devise all of these mind components of fraud into the shape of your choice. Whatever the shape you choose, there is one particular component that no one really talks about, or rather, I haven't come across it yet. And I am of the firm opinion that this component, called culture, is a large contributor to employee fraud, the fraud that we see prevalent today. And when I say culture, I don't mean it in a religious context, for we all know that religions all say thou shalt not steal in so many different ways. But for me, this unknown phenomenon called culture within the fraud spectrum explains the stark difference in how people from different continents perceive right from wrong. For example, I have personally asked a government official if she thought that making several copies of her daughter's assignment on her official work printer was fraudulent. And she very happily replied and said no, explaining to me that the department should be grateful to have her as an employee. I also know that in several parts of the Far East and Greater East and even European East, that bribing someone for a favor is considered very okay. In fact, it is legitimized by a term called bakshish, which literally translate to gifting someone for a courtesy favor. So be very mindful that cultural backgrounds that perceive fraud differently will contribute to the likelihood of fraud occurring. A fraud fighter has to keep this in mind. I'm going to take you quickly to slide 4. Okay, what is the impact? And what is at stake? Let's look at the softer and the harder impact of employee fraud and failing to recognize the red flags. People, do not be fooled. The corrosive nature of fraud will eat at the very heart of any organization. Your organization is not bulletproof, and if there exists a pattern of complacency and lack of understanding of what fraud risk management strategies can do to mitigate risk, then yes, there will be a price to pay. We have to debunk the myth that it won't happen. It can happen. And the enemy within, which is employee fraud, often goes undetected until it's too late. What should be our standard and the benchmark for considering what is fraud and not? Can a R1 billion fraud scheme linked to the arms deal be considered fraud because of the value attached to it and not the one of the lady running the company printer for her personal use? People, they both are fraud. That's it. Apply zero tolerance always. I'm going to walk you through some of the points on the slide that you see in front of you, which is the 4th one on your right-hand side that says, as time passes, the tiger ride will become less controllable and the rot at the top will end with everyone falling. And I'm going to walk you through a certain scandal that took place in India some time ago in 2009, where the founder and the chairman of a company called Satyam Computer Services, Mr. Ramalinga, confessed to manipulating the company's accounts and inflating profits for years. The elaborate scheme was applied over many years and included improper revenue recognition, diverting profits to entities that he personally owned, overstating debtor balances, overstating cash, inflating the books, misappropriating assets into family-owned entities, inflated undue bonuses. He was at the top of the organization. The rot started at the top, and when he fell, the entire company went down with him. When questioned, and I find this so interesting, he very succinctly described his actions similar to that of riding a tiger, unable to dismount and stop for fear of being devoured by the very tiger that he rode. And that's the point I want to emphasize. The longer you are engaged in perpetrating fraud, the harder will it be to stop. And similarly, the longer you take to react to fraud, the harder will it be for you to counter fraud. People, what are the implications of fraud? Fraud is a powerful force, and yes, we can detect and counter it. But when it happens due to a lack of mitigating controls, the effects are harder and far worse, such as job losses, irreparable reputational damage, or reduced staff morale and loss of good employees. And these are very prevalent and will be prevalent if we do not take mitigating circumstances. Slide 5, Lisa. Okay, internal strategies to minimize internal fraud. We have to lead by example in every organization, no matter which position we hold. Everyone is accountable, and everyone should adhere to internal policies and procedures, regardless of seniority. We have to create a working environment that encourages employees to be respectful to the organization that they work in, and that this is a very powerful tool indeed. Policies and procedures must be well articulated, accessible, and with a clearly defined culture of zero tolerance. Separation of duties, delegation of authorities, supervision, preventing end-to-end, where the referee cannot be the player at the same time. And we have to encourage a culture of whistleblowing. More often than not, sadly, we are led to believe that investing in fraud risk management strategies is a cost that could be avoided. Having said that, an organization's failure to apply itself diligently and its inability to fully comprehend the benefits of applying simple mitigating controls creates the perfect setting for fraudsters to pounce. Lead by example. If the rot is at the top, everyone will see this as an opportunity to follow suit. Cultivating a culture of respecting the organization you work in with well-documented policies, clearly defined separation of duties is a must. Having investigated fraud cases in the public sector for many years, I can affirm and say very sadly, a current and fast deteriorating reality is that legislation around the protection of whistleblowers when making a disclosure is far from sufficient. For me, this fact is the number one factor that is responsible for fraud going undetected. We have witnessed far too many good people pay the price, the ultimate price also, like loss of life, in the fight against fraud. Despite this sad reality, we are duty-bound to encourage whistleblowers to make the disclosure. Slide 6, a window into fraud at our very own doorstep. People, I want you to walk with me and journey with me through this quagmire of employee fraud that is so prevalent. As we speak, it will astound you. Now, all of you are familiar with the DLTCs, or the driver learner testing centers. They all exist in every major town and city. And the primary objective of these centers is for learners, aspirant drivers, to go in and book a driver's or a learner's test and hopefully pass the test and fulfill the objective. I want to take you through what actually occurs at these learner centers as we speak currently. So at the center, the aspiring learner will log a booking online or physically. The slots are block booked, and upon inquiry, you are prompted by the official at the DLTC to contact an external driving school instructor who will assist you in securing a booking. However, that comes at a price, and that should not be so. Driving instructor will offer you a booking of choice with a package deal of between 5,000 and 10,000 rands, and that will include 5 driving lessons as well as a guaranteed slot to write the exam and a guaranteed pass no matter what. Believe it or not, this happens. You may not even be required to write the test, as it is preloaded sometimes, or you may be assisted by the point of a hand or an infrared light to the right answer. People, work with me. 5,000 rands per person across a 30-seater slot is not a lot of people, but 5,000 rands across the 30-seater slot at an average of 3 seatings a day. That's 75,000 rands cash per day, per center, fraudulently exchanging hands across 20 centers throughout Gauteng. That's a whopping figure over a 20-day month. And this is no lie. Officials, driving school instructors, senior officials, all have a stake in this scheme. This is a reality, people. Employee fraud at its very peak. And that's just the learner center. What about the driver centers? Let's not even go there. The solution, believe you me, exists. The will to implement the solution does not exist. And this is one of the primary reasons why employee fraud is so prevalent and so rife. We just don't have the will from the top to take the necessary action. If any of you are familiar with the system, the DLTC system in large parts of the KZN area, you will know that a fully automated system was implemented years ago. This fully automated system allows the incumbent to make a booking online with an ID number. The system design prevents block bookings, which cannot occur. The incumbent will appear on the day with identification and undergoes an infrared pupil detection test to ensure that the right person writes the test at the center. The testing center is fitted with cameras to monitor every move at every desk that every learner occupies, with confirmation that the test is new and clean. At the desk, the incumbent is again requested to verify identification and perform a fingerprint scanner to reconfirm that the right person is performing the test. The system will not be accessible If these checks fail, you will not be allowed to write the test. Upon writing the test, the incumbent is allowed time to check and confirm the answers and submit these, after which an automated result appears as pass or fail. Throughout this entire process, cameras have monitored and recorded the entire session, and the system design is able to provide an audit trail and an audit report at any time of the session. At the driver centers, a similar control mechanism is in play. Fraud proof. But when the greed sets in and the fraudster rides the fully grown tiger, getting off is no longer an option because the stakes are just too high. I leave you with this concerning example of employee fraud. People, make no mistake, employee fraud is not going away until we give it the due attention from the top. I thank you. From Kanisa Consulting, shedding light on the dark corners.
Thank you so much, Abdullah. That was certainly eye-opening. Like I said, disconcerting actually to see how much of employee fraud is featuring in the news, and how common it actually is. So looking forward to discuss this with you a little bit more when we get to the Q&A session. So next up, I'm very excited to introduce you to two ladies from Grant Thornton. There's their beautiful pictures. The one lady is Ronelle van Beek, and the other one is Runya Makanza. Both ladies are senior managers within their firms. Ronelle with expertise specifically related to forensic investigations and ethics, and Runya on her side with expertise in technical audit. So this makes them a very dynamic duo for the session today. I don't want to say much about their session because you need to experience this powerful story of theirs firsthand. So without further ado, a wonderful welcome to you, Ronelle and Runya, and over to you, please.
Thank you, Liesel, for the opportunity.
Thank you so much, Liesel, for the opportunity. Thank you so much for the introduction, and good afternoon to everyone. We are going to be talking about igniting the spark, auditors, the guardians against fraud. So maybe someone might actually be asking why we are now saying auditors, or talking about auditors as the guardians against fraud. Are we now taking the responsibility of management and those charged with governance of preventing and detecting fraud? Not necessarily, colleagues. We just want to share some insights or some thoughts on how we can add another eye with regards to fraud in our audits. And this is really because of our responsibility just to ensure that we obtain reasonable assurance that the financial statements are free from material misstatement, either due to fraud or error. This is really the reason why we are here. And then to kick off this conversation, we'll speak to Ronelle, who is a whistleblower, and she's going to start by telling us about her journey and as a whistleblower and who she is.
Thank you, Runya, for your introduction. First of all, I must confess, I'm not an auditor. I have the utmost of revere for auditors. So I come from a different background. I'm 53 years old, and I proudly say that because I have lived a long and an eventful life. And I still sometimes can't believe what I have achieved, what has happened in my life, and everything that I've been involved in. And I'm going to share just a small portion of it. More so than anything is to create some sense of a spark on things that you can get involved in. But let me not run ahead. So I joined the South African Police Service as a young 18-year-old, very conservative person, with no background at all in terms of what I was going to do, just, find some employment. And in my first week, I saw that this was where I was supposed to be. I had a natural instinct for investigations and intelligence work. And I was very blessed in terms of my career in the South African Police Service. I became the youngest senior officer at the age of 28 during my journey at SAPS, and I drafted a process which was introduced in the South African Police Service called the Crime Threat Analysis Process. It's basically geomapping of crime. The Belgian police heard of it, and they flew me over to Belgium to present this to them, and they also implemented it there. But my journey did not end in the police. SARS heard about me and what I did in the police, and they offered me employment. I was a bit wary because I did not know a lot about tax at that point, but I decided that looks like a great opportunity, and I took it. And I ended up becoming the head of criminal investigations and prosecutions at SARS. When you read, or when I was still at SARS, you read on the newspaper headlines about tax evaders that were sentenced for 12 years direct imprisonment, smugglers being caught, 2.4 billion rand personal income tax assessments issued. Now, those were the type of investigations at SARS that I was involved in, or that I managed at SARS. I was responsible for about 300 investigators, and I promise you, investigators are a different load of people to deal with. They can be very naughty. So they gave me grey hairs at a very early age. And but what I learned from that was that in each and every investigation, there's something different. And I learned the power of networking. Now, during my period at SARS, I was blessed to have received a grant to go and do my MBA. So I was privileged enough to attend classes at Harvard, Columbia, Fordham, and West Point Military Academy. And so I have a vast amount of experience in terms of investigations, forensic skills, behavioral and psychological profiling, investigations of organized crime, smugglers, and now I'm at SNG. And Runya, later on, when you ask me the questions about whistleblowing, I'll get to how I ended up at SNG. But just quickly, what I do at SNG is I call myself the minister without portfolio. So I help with audits, I help with forensic investigations, internal investigations, disciplinary hearings. I help with due diligence on new and existing clients. And I also assist in conducting fraud risk assessments, compiling fraud risk registers, and fraud prevention plans. And then I'm also a certified ethics officer. So Runya, I think that's my short description of my journey.
What a journey, Ronelle. Thank you so much for sharing that. And maybe someone is really thinking, why whistleblowing? Where did you do this? How did you blow the whistle? What was really the spark? What made you think of blowing the whistle, Ronelle?
Runya, I think one of the biggest motivations for me was, and maybe I start at the end of my story, is what I saw being in the middle of state capture and what it did to SARS, how destructive it was, not only to the organization and its employees, but to the country itself. And I saw this happening from 2013, when nobody at that point yet realized that there was something called state capture. You had an organization that ran at the #1 spot in the world as a tax authority, that was really doing good work, that gave back to the community, that understood the higher purpose. And then in came a consultancy firm and basically eviscerated the entire organization. Now, when this happened, as a result of being an executive in a quite a complex department, I was questioned about the new operating model that they wanted to introduce. And basically what they did is they only had structures. Now, if you understand the principles of business management, you need a strategy, and your structure will follow that strategy. So I blew the whistle from two perspectives. The first was from an MBA academic perspective, in which I questioned the new operating model or the structures, where I researched 42 business models to try and fit in their business model, to try and understand it, to implement it. Because I was not kicking against any restructuring. I just wanted to understand how to implement it and improve and make my area more efficient. And I could not obtain any answers from them in terms of any of my questions. And that made me very suspicious about the reason for the changes they wanted to make. And in the end, when you look at Judge Nugent and both Judge Zondo's reports on the part of SASH, they did say that there was an intentional strategy from the side of President Zuma and other people that were involved in state capture to eviscerate, especially SASH, for nefarious purposes. The other one is I investigated a VAT fraud case involving 42 million rand, which had as an aspect corruption and bribery of a SASH official. I completed my preliminary investigation, and it was sent to the Chief Operating Officer of the Enforcement to make a decision. My recommendation was that there was evidence and that the case should be further investigated. The Chief Officer then changed the recommendation to say that there was no evidence to sustain any of the allegations. All of this, I'm not sharing any confidential information. All of this was reported in Judge Nugent's report. And then when I started raising all these questions, Rinya, and I think that's going to be a question from your side, because I'm telling you all these gory details about what happened, and people sometimes don't believe you when you tell them that these things were so in your face, is that they made life difficult for you at that point. So the spark that you asked me is, I'm a servant of my country. As a government official, it was an honor and a privilege to serve my country. So I cannot stand by idly and see people destructing my country and the organization which I love dearly. So that was the spark.
Wow, incredible, Ronelle. I'm sure, I was just thinking when you were speaking that anyone can be a whistleblower, Ronelle, but it's not everyone who is willing to do that for many various reasons. I think you were also just touching on some of them already. And this really includes a fear of victimization. So maybe at this point, it might be worthwhile for us to hear how you overcame the fear, if you had it. Did you face any challenges, and how did you survive those challenges, Ronelle?
Runya, this is a very personal story that I'm sharing with the audience. I feared for my life. I feared for the lives of my children and my husband. There were very real threats that were raised against us. So after I raised the concerns that I have, after I blew the whistle, and I was vocal about it, but in the correct way. I would write memoranda. I would do presentations in EXCO board meetings to set out what I'm seeing and to make solutions to the problem. So I didn't keep quiet. I raised my voice, but I raised it in a respectful manner. And the mistake I made is I thought it was a gentleman's game, and it was not. I faced a full frontal attack on myself, my credibility, on my family, on my career. I had 7 internal investigations against me at some point. I had rogue units from the South African Secret Service surveilling my children, taking photos of them in their car, posting that on intelligence reports stating that my husband was a smuggler. And just on a lighter note, I stay in a very small house. I only have 1 bathroom and we've been married for 30 years. If my husband was indeed a smuggler, he's the worst smuggler in the world, or he's hiding his money in such a way that I cannot find it. That's just on a lighter note. But the only thing that I had left at that point was my credibility and my reputation. And I took punches every single day. And it had an effect on my health. It had an effect on my mental health and that of my family. And on the day that the 27th of October 2017, when I resigned, I was pushed to make a wrong decision and I refused. And I stood up in the meeting in front of Exco and I said, I resign. I was subsequently escorted off the premises at such like a criminal. I was not allowed to gather my personal effects. And I was also instructed not to engage further with any such officials. I then had my 30 days at my house, isolated, worried about what was going to happen to me. But with the support of my husband and my network that I had, I didn't lose my mind. So as a result of it, Runya, I suffered 2 light strokes. I now suffer from epilepsy, but it's been 3 months since I've suffered an epilepsy. So I think that is going well and I'm optimistic about it. You know, I'll continue the fight because it's part of my DNA. So those were some of the challenges that I faced.
Thank you, Ronelle. Quite breathtaking. It was quite a lot that you went through, but you are here. We're glad to see you here and you still speak through it. Moving on, Ronelle. So somebody might be asking why you are at SNG Grant Thornton. Why are we talking to you in a conversation for the auditors? What does this really mean to an auditor? How do you think, as a whistleblower, as a fraud expert, we can improve our fraud lens, and why is that important?
So Runya, I think I must also include something about surviving being a whistleblower, because I've now just talked about how bad it was. But the fact is you can survive it. And to get to the answer that the question that you've asked me, I think it's important that auditors realize that they play a key part, a pivotal part in the fight against fraud. The game has changed. The rules of engagement has changed in our context as auditors. And the way that I survived it, and this is some learnings that I want to give back, is that you have to have moral courage. You need to be an ethical leader. You need to be trusted. You need to have credibility. People believe in your track record and that you build up over time and through being consistent in your approach. And it has to be in your DNA to say that you know, I'm in this position and that I owe it to my country and to my company to do the right thing. Now, in coming to blowing the whistle as an auditor, Sir Donald Brydon said that the question of fraud is the most complex and misunderstood in relation to the auditor's duties, and I want to agree with him. Too many times I hear people saying when there's a scandal being posted on the news, they ask the questions, where were the auditors? It's easy to climb on that bandwagon, but I choose not to. I choose to take a different view. I choose to take a view in which I want to help auditors to make that lens stronger in terms of how they identify fraud. And I think this is an approach that SNG Grant Thornton has started doing, where they take a person like me and they use us as part of the audit team to give advice, to give insights in terms of when we take on clients, what are the fraud risks that are prevalent in that industry, for example. So I look at it from a different perspective. And I think not only is collaboration one of the values of our company, but I think by doing this, we show how collaboration strengthens the capacity of the auditor to identify fraud much sooner, and it empowers them to do that. So I think I will be right to say that when a company fails because of fraud, or the fraud is uncovered not long after an unqualified audit report has been issued, it damages the stakeholder trust in financial reporting. So we want to stop that from happening with what we are doing by giving this different view. I also propose that that audit teams require the use of forensic specialists in the audit on targeted-based, risk-based assessed areas. So training. You cannot expect an auditor with the current training manuals that they have to be in a position to identify fraud the same way that a fraud expert like me that's been involved in it for 34 years. You cannot expect that skill from a person coming straight out of university. So what is fraud? What are the red flags that we can identify? Because that information is available, but do we share it with the audit teams? Do we empower the auditors to be in a position to easily see where the fraud is? And with the increasingly complex business models and sophistication of fraudsters, I say that the rules of engagements have changed. So we need to change our strategy and be more preventative and proactive in terms of how we approach it. So knowing your client and taking on your client is not just a tick box exercise. There must be ethical values behind that. So I think that collaboration and sharing of the information, Runya, can really assist the auditor to make a far better impact in terms of fraud prevention.
Thank you, Rona, for the great insights there. Excuse me. And I agree with you that it's important for us as auditors not to just start looking at or thinking about fraud when we've already started with the audit. It could really also work when we are still trying to accept an engagement as well. And you've shared some insights around how you're also getting involved in that part, and also involving you in our audits as a fraud expert as well. So it's important for us as auditors to also then consider such experts in our engagements, especially in those engagements where we know there are certain allegations or ongoing investigations that are actually taking place. And one of the speakers earlier spoke about professional skepticism when he was answering a certain question, and this is quite an important principle for us, especially now when you're dealing with fraud, and that's exactly what he was alluding to. I just want to hear your insights around how you've seen us as auditors at S&G Grant Thornton reflecting professional skepticism, and how you think we can improve this principle.
Rinya, just to complete the discussion and on top of what you just now said, is I think the role that myself and the team that I'm in, the biggest thing is we give sound advice, but we also give a basis for auditors to feel comfortable with having this background information. You feel comfortable with all this knowledge going forward in the audit. I think that creates that sense of comfort as well. But talking about professional skepticism gets me very excited. Anything about being skeptic or, finding out things, maybe that's why I'm such a good analyst or intelligence or investigation officer. I want to ignite the curiosity in auditors. I want to show them how how easy it is to identify fraud risks and how proud you become when you do that. And it's not just about proving somebody wrong. It's not about fighting with management whose responsibility it is to identify fraud. But one of the most important roles that the auditor plays is giving recommendations to management to improve controls and accuracy of financial reporting. But in creating that to create that spark about professional skepticism, I have some practical, very practical comments that I want to make. And this is, do not speculate. That's the first thing. Stand your ground, have confidence, be authentic, look at your brand. You need a good track record through consistency when you raise these things. You need to have confidence when you speak up, and you get confidence by getting knowledge. So getting the facts and getting the knowledge behind you gives you confidence. Trust your gut. Initially, it may be wrong, but the older you get, the more you need to trust that little voice inside of you. And we need to learn to be assertive, not aggressive in our approach towards management, but assertive, because it is our job to ensure that the financial statements reflect a true picture of the financial situation of the company. And when we write that we agree with it, we put our hand on paper and we should take it very seriously. I think what also helps is not to bring emotion into the discussion. So again, I want to fall back on the facts and the evidence, and you need to do your homework. You need to be the one in that room that has the evidence available and ready. Ask open-ended questions, not just yes and no questions. Ask and work with your peers to make sure that you understand, and ask until you understand what people are explaining to you. And I think the most important thing is not to become over-skeptical, but to keep away bias and to stay objective at the end of the day, and not to come to a conclusion before you have all of your ducks in a row. And then an esteemed colleague of ours, Rinya, I don't think you've met her, Sanmarie Storm, helped me a little bit because she's an expert in training, training auditors in terms of professional skepticism. And she gave me some good advice. She said, when you go to a client, you must look at the organizational culture. What's the interactions between management and the employees? What is the management style, the tone from the top? And I think some of the speakers today have already spoken about that. She told me that what we need to look at what the reputation of the company is in the market. And also, I think something that we don't think about is the key performance indicators may be wrong, and it may drive the employees to do the wrong thing because they need to show turnover or, good performance or things like that. And then are the values of the company visible throughout what they do? So thank you, Sanmarie. Those were brilliant things that you gave me. And I think that, bringing somebody like her into the discussion was a good idea.
Thank you, Ronelle, for the insights on how we can also just improve our professional skepticism as auditors. And speaking to culture as well, I think culture must then be added to the fraud triangle. I don't know if it should then be still a triangle or not, but it's coming up again that culture, we should consider the culture as well in relation to fraud. Thank you so much, Ronelle, for sharing all the insights, for sharing your journey as a whistleblower, and thank you for serving the nation.
Thank you. Liesel, if I may, just in conclusion, I want to share some wisdom. And what starts here today can change the world. You will fail, and you will fail often, but you can never, ever give up. You cannot do all of this alone, and you need to build a strong network, and you need to find some people to help you. And it's the only thing that matters is the size of your heart. Nothing matters more than your drive to succeed. And if you do your homework and you speak from a position of knowledge, you will get that that reputation of a person that comes from a position of power, and you will build your credibility. The last thing I want to say is respect everyone. Life is not easy and it's not fair. But if you take some risks and you lift up the downtrodden and never ever give up, you will change the world. So thank you very much.
Thank you so much to Ronel and Runia. Like I said, it's a powerful session. You needed to experience it firsthand, and you certainly inspired me, I think, to be more intentional, about my decision making. And I think, both considering from a professional and a personal perspective, what type of legacy, I want to leave behind. So we are nearing the end of the program now, but before I let the presenters go, I see Abdullah, thanks, you've switched on your camera as well. So we'll do a quick Q&A before we conclude. I think whilst Abdullah also just settles in again, I wanted to actually elevate one of the questions that was posted in the chat. And the question that was posted, you did respond to it, Ronel, but they said, what are the key measures that can be implemented to protect whistleblowers? And I think you mentioned some policies and so forth, but in the conversation that we had in prepping for this webinar as well, you mentioned, an NGO and lots of sources outside of organizations, that are available to people when they find themselves in a situation where they need help. So I thought it might be helpful if you could please share as well those support networks that could be available to people if they need it.
Thank you, Liesel. So first of all, in the chat, I said that you, in terms of the Protected Disclosures Act, you must have a whistleblower policy and program in your company. That means that you need to have an anonymous hotline, and it normally reports into your Social and Ethics Committee. You need to have a whistleblowing policy. And I think we've been involved in with some clients to draft these whistleblowing policies that we align closely to the Protected Disclosures Act. And the Act is very clear about discrimination and what fines the company can face if they do not align themselves in terms of labor court and things like that. But then, as a result of being really knocked with the state capture whistleblowing, there's 550 more people of Ronel's that sit around in this country today. And some of them are in exile because their lives are still under threat. So we decided that we would start an NGO. It's called the Whistleblower House. You can find it on LinkedIn. It's an NGO, and we are funded by private companies. And what we give is we give safe houses, if necessary, if people's lives are threatened. We give legal counsel for free. We give medical assistance for free. We give psychological assistance for free. So people can go onto the Whistleblowers House on the LinkedIn site. They will find the contact details and everything like that. Because as a whistleblower, I know how hard it was without any assistance. Luckily, I had a network around me that looked after me. And luckily, I had an employer that employed me as a whistleblower. SNG Grant Thornton was threatened by the Commissioner of SARS at that point not to appoint me. But SNG Grant Thornton took a stance, a principled stance, to say we want people like Ronel in our organization. And when I'm at these forums, I say I challenge big business to involve whistleblowers. They are not troublemakers, they are troubleshooters. There's a difference. So I hope that has given some clarity.
Thank you very much, Ronel. I think that certainly has been very helpful. I think if we perhaps focus a bit on this relationship in terms of your employer relationship with Grant Thornton. I suppose the mutual benefits that we've gained from this relationship. And this is a question then to you, Runya, having worked alongside Ronel for some time now. How do you think this has influenced your response to red flags? And I suppose what have you as an individual, but also what have you as a firm learned in terms of working with Ronel?
Thank you for that question, Liesl. I think as an auditor in an engagement, we are required to consider whether we should include experts on our engagements, depending with the circumstances that are at the engagement, depending with the complexities that are there. And so we are so used to the common experts that we usually use. It could be your actuaries, depending with where you are at. But having Ronel at the table has also made us to think that we can also widen our pool around experts. And especially where you've got engagements, where you've got allegations that are going on, or you've got investigations that are ongoing, you really need a fraud expert to be there. I think she actually mentioned it, that you cannot expect an auditor to perform or to perform the same way that I do, because I've got 30 years experience, or she has been trained in that area of expertise. So it has actually then helped us at S&G Grant Thornton from due diligence. She mentioned that accepting a client, is it proper for us to accept this client? Preliminary activities as well, risk assessment, fraud risks. She also mentioned it, and that has really helped us. And also just by her being also the ear about what is actually happening around fraud, if there are any publications, bringing those to our attention and help us to consider those, the impact of those on our audits as well. As an individual, I guess it's really about being courageous and like she said, not being too skeptical, removing any bias as well, and ask until you understand what the next person is telling you. That's what I can say I've learned, Liesl.
Perfect. Thank you, Runya. I have one more question for Ronel, since this is flowing at the moment. Abdullah, I'll turn to you in a second. But I think, Ronel, you mentioned that it could benefit auditors to be a bit more training, or be a bit more aware in terms of, how to think like an investigator. And I remember in our conversations you mentioned, simple things that you can pick up, when you're looking at a document. That can help you identify, whether there's a potential issue with this document or not. So if you, in like 2 sentences or 3 sentences, can give 1 or 2 tips, I think that would be great.
I think the first thing that comes to mind was an investigation that I did on a fraudulent tax clearance certificate, based on which a tender was awarded. I merely looked at the tax clearance certificate, and I looked at the original one, and I compared it from the left to the right, to the bottom to the top. And I saw that the reference numbers were not correct, that the font is not correct. The tax number was at the wrong place. The address is wrong. So by knowing what a document should look like, and looking at the document that's presented to you, you should be able to pick up if there's any fraud risks. And as a result of that, that tender was withdrawn. It was not given to that specific vendor. So it's small things that you pick up. And the thing is with training is I can give a class. I can give a class in terms of high level red flags and whatever. But the experience I have is I've gained over 34 years practical experience. And I think that is lost in our current environment. There's this big gap between the older generation and the experience that we have, and the younger generation, that we want them to operate in an environment that I don't think that they're ready for, because we don't empower them to really have the means to fight against fraud and corruption.
Thank you, Rana. I think for me, what you've said there is really reading something with comprehension, even if it's just an invoice. You know, we tend to focus on the number as opposed to necessarily reading a bit more broadly. What is this thing that I'm looking at? So that's very helpful. Thank you. Abdullah, in your session, you shared such a useful and powerful example of employee fraud. But tell me, please, based on your experience, how difficult is it to detect employee fraud within an organization? And I suppose when you do find yourself in a situation where you suspect employee fraud, what do you do?
Thank you for that question, Liesl. I think it would be an injustice if I had to answer your question without first expressing my admiration for Ronelle and the work that she's done, for the sheer resilience, for taking a stance against what's right. And it's just, I have to echo the Ronelle's words when she said, what about all the other Ronelles out there that have spoken and they face the wrath of their actions? And what about all the other Ronelles who want to speak out, but just have this natural fear of what's going to happen? And so my heart goes out to those two sections of Ronelle. You're in the middle, by the way, Ronelle. So, but truly my admiration to you. In answering your question, Liesl, it will all depend on the complexity of the organization or the entity that you find yourselves in, the nature of the business, the nature of the work, the number of employees, and so forth and so forth. But Ronelle echoed just now what I really want to say is that in the current scenario that we operate in, where we have this natural inclination to believe that fraud has taken the next level and it's become so complex. Strangely, in many instances, fraud in the public sector in South Africa, for example, fraud is still committed with the basic, and I see Ronelle's shaking head, and it's so true. It's the small things that you pick up, that you tend to overlook, that really give you direction to the real fraud out there. So you don't have to always be focused on the bigger, more complex things. You have to start with the more smaller occurrences that would have occurred 5, 6, 7, 8 years ago. They still occur today, and it's not some of the red flags that you could immediately pick up on are lifestyle changes, immediate lifestyle changes of an employee, or a fraudster has this natural tendency to operate as a silo in his organization, in secrecy, inconsistencies in financial transactions that should be a red flag. And so these are some of the factors that you could pick up on. But I must tell you again in ending that it's not difficult to pick up on the red flags if you just apply yourself and if you have sufficient knowledge of the business, and you pick up, you'll have this natural ability to pick up on the inconsistencies.
Yes, I think when I hear you speak and everyone has mentioned knowledge of the business, I think that also resonates with me, because I think as finance individuals, we focus on the finance function, whereas often, I suppose the employees are so familiar with the system that they can actually very easily manipulate it, so that you don't even pick it up from the finance side, but more from the operational side. So that broadened way of thinking, and I suppose just thinking logically.
Absolutely.
Okay, at this point, I think it's time for us to conclude. To the presenter team, really my sincere thanks. I really enjoyed chatting to you about this important topic of fraud. It's been so enriching, and I'm sure everyone who attended is able to take at least one thing home to go and either investigate further or implement in their day-to-day going forward. So with this, I'll thank you as well. In terms of concluding the session, I think I wanted to highlight just that we have more of these events coming up in future. So on the screen, you'll see there 3 more events planned for later this year: sustainability, S&P, and innovation. The dates have been advertised there. So although you can't register for these events as yet, please do save the dates and be on the lookout for the IRBA communique or the advertisement on the IRBA LinkedIn page where you will be able to register. Also, if you haven't joined any of the IRBA networks as yet, we are available on X, on Facebook, on Instagram. So do follow us on your favorite social media platform for the latest news. There's also a multitude of resources available on the IRBA website, our IRBA news publications, some technical guidance, communiques, the latest revisions to the IRBA code, as well as regulatory reports. Inspections report and enforcement report might be reports that our attendees are more familiar with, but we will also soon be publishing our first ever reportable irregularities report. So also be on the lookout for that. On that note, the IRBA team and I, we will greet you until next time, and I wish you a wonderful rest of week ahead. Thank you so much.